Stocks rattled. A familiar worry on Wall Street is pressuring the markets. There is growing concern that a Federal Reserve interest rate increase could come as early as next month and weigh on an already struggling global economy. It crept into the market yesterday and remained there today, pushing the S&P 500 into negative territory for the year. By the close, the Dow Jones Industrial Average fell 91 points to 17,435. It had been down nearly 200. The Nasdaq was off 26. The S&P 500 lost 7. Dominic Chu has more on today's slide.
A fresh round of worries crept back in the markets as traders continue to digest headlines from the Federal Reserve as well as some key earnings reports. The weakness comes a day after the Fed left the door open for a possible interest rate increase as early as next month. And earlier today, New York Federal Reserve President Bill Dudley reiterated that same stance.
If I'm convinced that my own forecast is sort of on track, then I think a tightening in the summer, the June-July timeframe is a reasonable expectation. So it's really a question of whether the economy sort of cooperates and performs in line with my personal expectations.
Interest rate concerns were just part of the picture. You also had some more uncertainty injected into the outlook for consumer spending and retail stocks. Walmart gave a more upbeat earnings report that seemingly bucked the trend of largely negative results elsewhere in the industry. Add to that the ongoing investigation into the circumstances surrounding the crash of an Egypt airplane, and you get enough to keep traders on the more cautious side. Not positive enough to push markets higher, but not so negative as to cause a broader market sell-off either. Traders will have data tomorrow to digest on both home sales and earnings from the likes of Deere, which is the world's biggest farm equipment maker. For Nightly Business Report, I'm Dominic Chu from the New York Stock Exchange.